Over the last 18 months, key global real estate markets have emerged from a period of severe global economic turmoil to a period of accelerated growth, fueled by an unprecedented shift to globalisation of real estate capital, where investment is now dominated by cross-border international investors. So throughout the period of turmoil and since, the Australian real estate market remains a destination of choice for global real estate investors seeking a safe haven for capital in a well-regulated and highly transparent growth-orientated market for doing business. So this market is now considered well priced by global standards, which adds to its appeal. And this is especially true for investors from Asia, particularly those who hail from Korea, China, Malaysia and Singapore. As an example, in 2007, just 31% of investment flow into Australia's industrial property market originated from Asia. By comparison, over the past 24 months, that number has more than doubled to 79%. And it's a similar story in the office sector, where the numbers are 32% in 2007 versus 65% today. In recent times, we've seen US gateway cities such as New York, San Francisco, Los Angeles, and European destinations such as London and Paris now attracting increasing volumes of offshore capital, particularly from Asia. In spite of this, what is it that continues to attract these same investors to the Australian real estate market? Well, we see a few factors still at play. First and foremost, Australia trades heavily off a reputation as a highly transparent real estate market underpinned by a sophisticated legal system and stable economic and political environment. All this feeds into the perception of a well-regulated market, an easy place in which to do business. Global real estate investors are well-researched and informed on the relative merits of the Australian real estate market. Secondly, what has also assisted in recent years is the introduction in 2008 of the Managed Investment Trust regime, which offers qualifying foreign investors a concessionary rate of withholding tax. Other changes have helped, such as the introduction of the Significant Investor Visa in 2012, which provides high net worth individuals with the ability to apply for an Australian visa and ultimately permanent residence on the basis of a minimum investment in Australia of $5 million. Thirdly, favourable pricing is important. Locally, until recently, the competition for investment-grade assets from domestic capital sources has been thin and certainly contributed to yields remaining attractive for investors. Interestingly, pricing remains attractive by global standards, particularly when compared to key US and European gateway cities. Finally, at the micro level, informed investors are aware that Australia's real estate market entered this period with virtually no oversupply in most sectors other than possibly Gold Coast residential. Together with perceived economic stability and population growth, this has helped Australia figure prominently as a beneficiary of global real estate capital. Amidst current speculation that Australia's resources boom has seen its peak, the commercial, residential, retail and industrial real estate sectors continue to be preferred investment destinations for real estate capital, particularly from Asia and North America, and many being first-time investors. However, the competition for Asian real estate capital from US and European real estate markets has surged over the last 6 months. And this represents, for some, a threat to our domestic real estate market, which is still hungry for foreign capital. It also presents a challenge to policymakers and regulators to improve the legal and tax regimes for real estate investment in order to secure continued investment by foreign investors.